Greetings, and welcome back to the Rose Bros podcast. This episode, we are joined by John Hooks, Chairman and CEO of Phoenix Energy Services Corp., a publicly listed energy services company with revenues of approximately $600 million. John has been CEO of Phoenix Technology Income Fund since 1995 and Chairman of the Board of Phoenix since 2000. Previous to joining Phoenix, John founded Thread Tech Energy Services, a private connection manufacturing and Fiberspar composite line pipe distribution company in 1985. Thread Tech became Fiberspar Canada and provided services to the oil and gas industry until its assets were sold in June of 2003. We sat down for a smooth cup of Rose Bros coffee and discussed lessons from 40 years in the energy services sector, why there are fewer rigs running today than ever, and why this has led to higher energy production and record profits. Enjoy. This podcast is sponsored by headracingcanada.com. Looking for high-performance ski gear this winter? In partnership with four-time Olympian Manny Osborne Parody, headracingcanada.com is offering the lowest prices possible through its online storefront by passing brick-and-mortar savings on to customers. Check out headracingcanada.com for more info and get your high-performance ski gear for the upcoming season. Okay, well, we're recording then.
All right. Well, thanks. Good to be here.
John Hooks, you are the CEO and Chairman of Phoenix Energy Services. Thanks a lot for doing this.
I appreciate it. Yeah.
I really appreciate your time. How would you describe Phoenix Energy Services for the listener?
Well, Phoenix is it's a wonderful service company. We're in the energy services sector. That's all we do. We focus 100% on directional drilling. And over the years, we've become a force in technology. And, we provide services that operators not just need, but they want. They want to drill fast, and we focus on that. So, the horizontal, every well is drilled horizontally. And since 1995, we've grown the business to be one of the largest ones in North America for sure.
You're also in cafes and hotels and a bunch of other stuff too, which I found out this morning, which is really cool.
Yeah, we can get into all that too, just try to diversify. And I've always liked land and building, so I've always been into some of that too over the years too.
Did you always want to be an entrepreneur?
I did. I think I sent you some material in 2006. I was fortunate enough to be nominated to participate in the Ernst & Young Entrepreneur of the Year Award, or runnings, and I was nominated, and I actually won the service sector Western Canada Entrepreneur of the Year. At that point, I'd kind of reflected on, since when I was probably in high school. And, in high school, I don't know, I just always wanted to do something that provided income or enjoyment. And, I started doing, way back then, even silk screening and stuff like that in my basement, to the point where I actually was doing the high schools, all their gym shirts and uniforms and stuff like that. And, the one thing about me is I have a pretty short attention span, I think, and high school wasn't real friendly for me on marks. And I got out of high school eked out with some very, very bad marks. And, I was fortunate my father worked for a contract drilling company when I got out of high school in 1976. And I went to work in the drilling contract business in Edmonton, working on some rigs. At that time, there was some opportunities to as a roustabout and a roughneck, to go and work on, in the Beaufort Sea for, Dome Petroleum was starting to drill up there. Not known to me at that time. I was just a roughneck, but they were looking for roughnecks and drillers and that to go to work in the Beaufort Sea on these drill ships that they were building from Liberty ships in Galveston, Texas. So I got a job. I got offered that job at $6 an hour and had about $20 in my pocket my mom gave me. And I actually went down to Galveston, Texas and worked there for about a week and a half on this ship. And, as they were building it, sailed that ship up from Galveston, Texas to Tuktoyaktuk, up the east coast of Canada and through the Northwest Passage. Then they anchored the ship and we started drilling. The money seemed pretty good at $6 an hour back then. And so I stayed for 5 years. And I think in all, I spent about a year and a half at sea, worked on another one in Singapore and sailed it back. And actually at 19, they actually made me the crane operator on the offshore drill ship. So I was the crane operator and I did some derrick hand stuff like that. And then, the NEP, I didn't want to work offshore anymore. I went back to land rigs and the National Energy Policy came out and kind of really put a damper on the as everyone knows back then, just crushed the sector. And so I moved to Houston and I worked for a contract driller down there, and I got into sales. Then the industry slowed down there, and that's when I started my first company back then. Did that, met some individuals that had some patents on some connections and stuff like that. Long story short, I started a company called Thread Tech. I was the only employee. I remember trying to sell these connections to big companies like Shell and Esso back then. And of course, I'm competing against massive multinational companies, and it's just me and some drawings. But got a few in the ground. And I remember the first invoice I ever did, I drove to Lloydminster. It was $67.50. And I drove all the way there and installed it and came all the way back. And that was the total invoice they'd pay. But I just kept at it, and back then, I didn't care about the price of oil. I didn't care about the price of gas. All I had to do, I just knew I had to beat on doors and just keep beating on doors and beating on doors and just kept persevering and never quitting. Grew that business up as a private business, grew it up until it was a substantial business. It did about $80 million a year in revenue when I sold it, and didn't have really any debt or anything like that. I never wanted to sell it. I always said that a business like that is like a home, not a house. And but I came across an opportunity to start in the directional business in 1995, so I sold it after that.
What was it about energy services that attracted you? Was it the opportunity, or was it followed your feet and one step at a time? What led you to energy services?
Yeah, well, like I said, my father worked for a contract driller, and I got out of school and really didn't have an opportunity to get into university or anything like that with my marks. So, I got a job on the rigs and once I started in that, I was attracted. I don't want to say it's like a hockey team, because I never got far in hockey when I was young, but when you're on a rig or you're on a ship and you're working, with the same people, all day and all night, you've got to get along. And so there is that camaraderie, and then there's hard work. And, I think that if you look back at those years working on the drill ships and working on the rigs and stuff like that, that's where I think, you really get a massive amount of work ethic. Hard work overcomes a lot. And if you go through those experiences, you start to learn what it takes. And hard work is one of the big ingredients.
Good money too. There's opportunity.
Yeah, good money, but there's never equity, when you're working on those jobs. But that's what you learn too. You learn that there's probably better opportunities when you start to do things on your own.
Right.
Yeah.
Energy services always kind of seem like the Wild West of the energy business. Why is that?
Yeah, well, I guess it's because in the past it always attracted, individuals that I think were, really outgoing, outdoor people that probably didn't have, to work in the energy services sector, of course. And I'm not talking about the owners of the companies at this point. I'm talking about, the people that work day in and day out, like 24/7, 365. That takes a special breed of person. There is no breaks, when you're on a rig or frac jobs and stuff like that. They don't stop for downtime. You got to keep going. And so, you attract a certain type of person, and that type of person, I think, has a lot of positive things going on.
Some of the traditional values that entrepreneur or just any business owner would value.
Yeah. And everyone knows or should know that it's a massive amount of hard work.
Hard work.
Yeah. I mean, I always liken it, when you look at even today, you look at, people that have left the sector, unfortunately, because the sector is much smaller than it was. We can get into that. They're away from home. They're working 12-hour shifts and, in some cases, only a few days off a month. So it does take a special type of person. And, but like I said, it's that type of hard work, that I think brings value to a person as they go through their life later on, for sure. I
read in the late 1980s, Thread Tech had $17,000 in revenue. Hardly enough to live on.
That's right.
So how did you get by? How did you make a go of it in those times?
Yeah, I didn't. I was the only overhead. I came back from Texas, and after working offshore, I will say this, like when I worked offshore, after I think the first year and a half offshore, I saved my money. It was only $6 an hour, but when you work, 80 some hours a week every week, and sometimes 2 to 3 months straight, without a day off. And you have to remember these ships back then, they had no communication, no movies, no TV, no nothing. You just worked. I think the longest one I did was when I went from Galveston to Tuktoyaktuk on, sailing, never saw land hardly at all. Got stuck in the ice a lot, but I worked midnight to noon every day for, I think 10 or 11 weeks straight, and then a week off and then go back. So, whatever money I made, I saved it. And I actually bought a house, a townhouse on the Willow Park Golf Course back there when I was 19 years old even. So I was kind of getting into it even then. And then, believe it or not, I remember moving to Houston. I think I had 20,000 cash, and I was getting, back then interest rates were absolutely unbelievable. And I think I was getting like 20% interest on that term account. But so I didn't have anything, but I didn't have much. I came back and started that company, and $17,000 was the revenue of the first year for sure. And, I was the only employee, but I knew I had to go hire another person, salesperson. And that's what I did. So I just kept pushing it, and, didn't even think about the money then. You just kept on going, but, that's true. Yeah. $17,000.
What made ThreadTech different? What allowed you to succeed? Because it's hard to differentiate yourself sometimes, although it is technology. What do you think made ThreadTech different than the rest?
It's a good question, because I was going to compete against big multinational companies that make, pipe, casing, tubing, drill pipe and connections. And I think the biggest thing was, when I was in Houston there, living down there, I met an individual, and he introduced me to a really cool guy, and this guy, he invented some of these connections, and he was an older guy than me. I was in my just mid-20s actually. And, this guy was selling this company was selling these connections in the United States and elsewhere in the world, but weren't selling them in Canada. And I asked this individual if I could take these connections to Canada and sell them here under his patent and pay him a royalty. And he had nothing to lose at that point because they weren't in the Canadian market. And so that's what I started with a design of a connection that was kind of proven in a way, but not ever run in Canada. And so I brought it up here, and lo and behold, I just kept pushing and pushing and pushing. And then I'd bought some other patents on other connections, and then I got a distributorship on the pipe, and from some of the Canadian manufacturers, and then it came to the point where we designed certain pipe for disposal wells and connections for disposal wells, and that. So we became real specialists in that field, I think, and still with the hard work ethic that you couldn't get from the big multinationals, because we were on the ground. We were in Nisku, we had trucks, we had people. We could go out there and provide all the services they needed in a couple hours notice. And, it became a pretty good going concern company. So I think that, the technology for sure differentiated us. I think that the work ethic for sure. And just the fact that we were, Alberta, Calgary based company that was providing a great service. I always like to say, it's not that difficult. I mean, customer satisfaction, right? And, if you always remember that and do that, you always, you want to retain and gain. You want to gain a customer and retain that customer. And, the best way to do that is satisfaction.
You found kind of an untapped market in Canada too.
Yeah. I mean, the reality is in North America, these wells produce oil and gas, but they produce a lot of water. And this water has got to go somewhere, and these disposal wells, we're getting more and more prevalent. And so we provided, one of our bigger parts of our business was providing the technology and the pipe and connections and that to line these disposal wells. Right. Yeah.
You ever cross paths with Chip Wilson? I read that he spent his first few years up in the rigs too.
No, I don't. I'm probably older than him anyways. So.
He saved up a bunch of money on the rigs when he was 19, 22.
Yeah. I don't know a lot about that story, but I did hear that. Okay. Yeah. Very little time. I mean, after I got off the offshore rigs and moved to the States and then came back, my time on the rigs then was just going out to them and running pipe and come back. I would go to a mill in Calgary. I would put the connections on the pipe at the mill or off-site third party, and then I would drive to High Level or Zama Lake or wherever they wanted to run this. I'd drive 15, 16 hours, and I'd get on the rig, the service rig usually, and run the tubing, and then I would drive all the way back. And you just do this over and over again. And you put a lot of miles on back then and a lot of time and energy, but you learn a lot too, right?
Did you ever worry that your time wasn't being used right when you're driving everywhere and putting all that labor into it, that you weren't really getting anywhere, and that the real money is in, like you said, the equity or using your brain?
Well, yeah. Well, at that point, I'd started the company ThreadTech, so I owned it. So that was my obsession. Like, I always say, if you're sleeping real good all night long, there's probably not a good chance you're a real entrepreneur. If you're an entrepreneur, you're probably not sleeping through the night, or just driving by anything and looking at anything and thinking about it and what could be of that or this. And, when I started ThreadTech, it was my obsession. I mean, I couldn't afford a facility at the start. I remember putting these parts and pieces down in the basement of an acreage that I'd had, and then loading my truck up and going from there and stuff like that. So, everything just revolved around that. It was selling. I had to go out and sell it. I had to make it, and then I had to run it. And I did that until I could get up to a level where I could actually hire another salesperson, and that helped. And then another one, and then, more people, and then actually built a facility in Nisku and hired operations people. And then it started to really go. So, but at the beginning there, I just had to do it all.
Did you get a sense the margins were there and the opportunity exists, or when did you kind of discover that along the way? How did you know that the path was worth going down?
Yeah, I'm not that bright a guy. Never went to school beyond high school, and didn't do real good in math then either. But yeah, I tell you, it didn't have a lot of options, it seems, but this seemed like a really good one to me.
The bank account was growing.
Well, at the beginning it didn't, but but that's kind of misleading too. I mean, it really got, I think I was as good at selling it as the procurement of it as I was at selling it after I learned. And I would go down to Texas and deal with machine shops and make deals with them and try to get a better deal all the time when I had to manufacture these things into what we started to get into some really high volumes, like thousands of these, a week even, of these couplings, for tubing and stuff. And, I remember at one time I went down to a machine shop, and this very wealthy machine shop owner had, maybe 100 of these machines making connections for companies all over the world. But he took a liking to me and liked what I was trying to do on a very small scale. And I just said, I can't afford to pay you like up front like you want. But, so he actually made a deal or I negotiated a deal where he said, I'll make these connections for you, and I'll put them up in your facility in Canada. And then and of course we only had fax machines back then and phones. We didn't have the internet and stuff. So when you take out so many, like I'll send like 10,000 of each size you need, you send me a fax and I'll invoice you. And so I thought, well, that's a good deal. So I would go sell it to the oil company, try to get 30 days pay and beg for that. And if they did that, by the time that I ran it and sent him the fax and got the invoice and wait 30, 40 days, and then I'd pay him 30 days after that, I was like 60 days before I paid him, and I had already been paid. So, you start to get creative and stuff like that. But, yeah, some luck along the way too, I guess too, right?
When you sold ThreadTech, did you just think to yourself, I'm going to golf every day and go lay on the beach and my life is good now? Or what were you thinking?
Yeah, no, because what happened was in 1990, when I had ThreadTech and I was sitting in my office, and I was actually officing, because I couldn't afford a good office way back then. I was officing above Tom's House of Pizza on McLeod Trail there, paying $200 a month with ThreadTech. A gentleman that I'd met in Texas had come back to Canada and said, hey, he'd heard that there was a little directional company that from the U.S. that was up working in the Midale area that would be for sale. And this was when horizontal directional drilling was in its infancy. And I said, oh, really? So that's kind of interesting. I don't know a lot about it. He said, well, come with me. So we just got in his car and went to the facility where this was. And it was a very small company, and met the manager there. And being an entrepreneur, I thought maybe, wow, I'd heard where maybe 5% of the wells were drilled horizontally then, or less, or directionally or horizontally. And they're just starting to think, wow, well, why wouldn't everybody do this? And that kind of made sense to me. So I bought this company, from some of the money that I'd made from ThreadTech. And I had to finance it. It didn't make money. The first year it did, I think, $2 to $3 million in revenue. That became, and it wasn't called Phoenix then, which is another long story, which I might get into. But So anyways, I had them both at the same time. So I had ThreadTech and Phoenix, and I had to move. So I moved downtown into some really cheap office space down here, and had them both into the one office there, which kind of helped because I had one accountant that can do both and da-da-da-da-da. But yeah, so for a couple years there, I had both, so there was no slowdown. I was more busy than ever because I kind of really got attracted to ThreadTech. Had good people. I had a good person running it, beyond me. And so I put a lot of my attention into trying to grow the directional horizontal company that is now Phoenix today. And, I some of those days, we had to cover the payroll from one to the other or whatever it took. You just kept on, like I said, beating on doors. It was all private then, of course. And so, yeah, it just got busier and busier, but never stopped,
So you sold ThreadTech, then you also had Phoenix at the same time, so there was no...
I kept Thread. I still owned ThreadTech, and I started Phoenix. Right. Or I bought Phoenix, and then, or started it kind of. And then, so I had both companies for a number of years. And then after when Phoenix really started to take up a lot of my time. And some other things like there's a lot of stuff that happened back then in the pipe business, where, big corporations were starting to buy up all the mills and stuff like that. And it was getting, maybe a little bit more difficult that I could see in the future to try to keep my position there. So I actually sold the company then to the company that actually had the patents everywhere that the only one they didn't was in Canada. Because back then I'd had the Canadian rights, and that the other company that bought from this gentleman for the rest of the world didn't have Canada. So it made sense for them to do, and they became a big company. It's Hunting actually is a big company in the energy sector, mostly in the US. But yeah, so then once I sold that, then I continued to just focus 100% on Phoenix.
And that was the early 90s.
Yeah, 95. Yeah, was when I started Phoenix. And, gosh, I think we could do like 2 jobs a day in Mydell there. We didn't really have any equipment. The people that I bought the company from owned the equipment. I couldn't afford the equipment that we needed to drill the wells. So I leased the equipment from them on a lease purchase. And, over time, they actually kind of got in some trouble. So I actually bought out the lease when we started to grow and made some more money. And then, then we really started looking at how we could expand and stuff like that. There were some companies that were really a lot bigger than us at that time, of course, because now you're going up against Schlumberger, Halliburton, and Baker, who all do that. And Weatherford at the time were probably the biggest by far. We were very, very small. Maybe, like I said, started at 2 million and pretty much organic growth through the whole period. But, this year, I guess we'll probably do over 600 million. And, we're probably the second biggest in North America, maybe. So, but, again, it's all people, customer satisfaction, technology. We do a lot of things right. And we do some things wrong, but we try to learn from it. Phoenix just became my obsession then in 1995 and beyond. And to this day, I'm still there. So they must like me.
So you've been CEO for roughly 30 years. A lot of CEOs, they come and go. Maybe some are good at sitting through meetings, sucking up to people, good at PowerPoints, but you've been CEO for a long time. What do you think has led to your success and your tenure for so long?
Well, I don't give up. Yeah. We've been, I honestly, the first 20 years was absolutely bliss. It was wonderful. It was, I always say that, as an entrepreneur, we want to be a company builder, and forces outside that include commodity prices, but geopolitical forces, politics made us company destroyers. After the first blissful 20 years, we all of a sudden had to destroy our companies and lay off hundreds and hundreds of people, because of certain decisions that were made or certain, events that happened that reduced the commodity prices where you don't make enough money. So I have really bad timing and didn't get out, but I stuck in there and just kept at it. Each time this happened, and they were short by nature back then, we built it back better. And then of course in 2015, the industry really went down in a big way, and it was down up until a few years ago. So again, we did what we had to do. I hate to say it, but we became very good at that. It's nothing to be proud of, but we got to keep the company strong, right? And we learn lessons along the way, and to this day, Phoenix really has no debt. And you'll probably see that as one of our themes, as long as I'm around anyways. And I think the others feel the same way. We just can't get into a position where we're going to become weak. It's been a wonderful ride, but it hasn't been without some massive amounts of some great ups and some really massive downs. Yeah. But overall, right now it's looking pretty good for a while here. So
one of the things we do when you look at a company that's been around for a while is you see the success, but you don't study all the other failures in the sector, and you only look at the winners. You've been around for a while, and so it's not luck, but sometimes luck plays a role. Was there ever a time where luck maybe played a role and you look back, that could have gone in a totally different way, or things worked out in your favor?
Yeah. Geez, that's a good question. Luck. Yeah, there probably was some. Some areas where maybe luck did play in our way, but in all honesty, we started to attract really good people. And I think that's because of us, people don't want to work for bad people. So, myself at, almost 30 years, and my CFO at almost 30 years, and my president now at 30, 20, we got people in this company way over 20 years tenure, that have never, it's the same group. And, there's a reason for that. And we learn so much, from the downturns and the mistakes, and we work as a group. So, yeah, there's probably some luck and stuff like that, but the reality is, I don't want to say we're that good, but I think we really know what operators want, and as long as we can keep doing it, we're going to provide it, and never stop trying to get better, because it makes us better. It's probably sometimes there was something that went our way in a good way, but it's obviously commodity prices and stuff like that going up is always good for us.
The industry isn't drilling as much nowadays. I guess the nature of the capital allocation and people aren't putting as much money back into the ground. But do you remember the time when drilling kind of reached its peak and things were going crazy through the drill bit, and you guys were there for that?
Wow. I can go back to when I first moved to Texas in 1981.
What was peak drilling?
There was 5,500 rigs working in the United States in 1980.
Oh.
In the United States.
1980?
1980.
Okay.
5,500.
Right.
So that's a lot of rigs, considering there's 150 running in Canada now, but you got to remember there is no such thing as directional drilling. There is no such thing as horizontal drilling. So the reality is, the technology is so misunderstood in this sector. And I can only talk about, the directional part of this, the horizontal part of this business, but the technology has advanced so far that we produce more oil and gas always with less rigs. And I'll give you an example. In 2014, when commodity prices fell a lot, the rig count dropped drastically, right? Massively. And what did we do? We had to regroup and get better. The operators don't have R&D departments, but we do. And so to keep ahead of the game, we had to try to make them more attracted to us. And the only way to do that was to develop technology that would make them better. And the best thing we can do is make them drill faster and more accurate. And if we can do that, they're saving money. And so to answer your question is, now you've got, under 800 rigs in the United States and 150 in Canada, and we're drilling more meterage than we did when there was twice as many, 4 or 5 years ago. Because the technology has advanced so far. You don't see production dropping. And in 2015, in my immaturity, I just kept looking at these statistics going, oh, well, if there's this few rigs running, the world's going to fall off a cliff here, and oil production is going to go down a massive amount in the Permian and in Canada, and we're all going to be out of this in like 6 or 9 months. Well, to my dismay, I just kept watching, and all I did was see the production not fall. And there's no, because we just got better and better at what we do. And that's not going to stop. So, we just, we if we're not the first or second best, and if we don't have the first or second best motor that makes them drill faster downhole, or guidance system that does this or that, or rotary steerable systems that do this or that. If we're not the first or second in those, we're missing it. We have to be that good. And if we do that, that's why we'll be successful, and that's what we're doing. So, we're going to drill more meterage with less rigs and produce the same amount of oil, or hopefully less. But my thoughts are we don't want more rigs. That sounds counterintuitive for a service company CEO to say that, but we'll do real good if the production doesn't grow. We need the operators to have good commodity prices, and we'll win the rigs that are out there. But if we add a lot of rigs to North America, we're going to start to produce a lot more, right? And so if that happens, then we'll see more struggles in the future. We want nice, steady growth. We believe we can always steal market share. And that's what we've done for decades. We didn't go from running 2 jobs a day to today we're running 98 jobs in North America by not stealing market share. Like, we stole a lot of market share. So we think we're good at that.
In your opinion, the best way to grow the business and expand market share is through good relationships or proprietary technology? Is it a combination of both? Good leadership, fair deals? What would you say is the...
Yeah, it's changed in a way. When I go back like 20 years, and I thought that the technology was leading then, and it may have been a bit then, but then it was more relationship and supply, because there was a lot of rigs working, and if you could supply it. But the barriers to enter started to get easier and easier. And so it became more difficult to be, the margins got probably depressed through a lot of those years in the past because of the barriers to enter, and all the service sectors became much easier as equipment became more available from third-party suppliers. And then what happened was, through these downturns, a lot of this stuff went away, but because companies like us and a few others really started to have to really look inside and say, what do we need to do, to come out of this way, way better? And the best way to do that was with technology. And so we started our R&D department, engineering, sustainability department years ago, but we've grown it. We have dozens of engineers in Calgary here working on stuff in the past, now, and stuff even for the future, that we wouldn't even talk about right now, that we think will be beneficial to operators in the future. But so it went from a business that was so relationship driven to now it's so technical driven. But that said, that the relationship part will never go away. I mean, that's just a part of the oil and gas business that either you love or you hate. Mm-hmm. And if you don't embrace it, shame on you, because you're going to miss some of the pieces to the puzzle. So we're a massive believer in marketing, sales and marketing personnel that have massive amounts of experience operationally in what we do. We only do horizontal drilling, directional drilling. So we only want people, and they are the people that know that business. So we don't send someone into like an Oxy, and go, oh, well, we just want that job. We send people in there that absolutely know exactly what's going on out there all the time. And because of that and the technology, I think that's the biggest part of how we've gotten to where we are and how we'll keep going. Yeah.
Without giving away your secrets, what do you think the future of service technology is? Is it deeper wells? Is it quicker wells? Is it cheaper wells? What do you think is the direction the business is going?
Well, I mean, the operators have, they've got things pretty good. Like in North America, you can pick up a phone and pretty much get whatever you want in a hurry.
Is it automated? You just put it all in the computer?
Well, I mean, it's getting, no, I mean, there's certain things that you will never be able to, do without downhole for what we do. One is, like, you can have the greatest rig up hole in the world, and you can have the greatest other equipment out there. But you still have to have so many feet behind the bit that's going to provide the power to that bit and the guidance to let you know where you are. And that's what we do. So we want to be the best in the world at those, because you'll just always have to have that. Automation, we do a lot of that too. I mean, we can do this without people at the site. We can do it remotely. We can all that, but you still have to have those assets downhole. And I don't see how that. So what we try to do is focus on making those assets way more powerful, faster transmission, data, information, and reliable. And so you're just going to see operators have pushed the limits so fast. Like we're drilling 3-mile laterals in the Permian in 3 days, 4 days, And to do this, you have to have equipment that is so robust. And it actually has to be totally repaired every time it's run. Like it's amazing what they do to this. They will, we want them to push hard. We want them to drill fast. You just have to understand we got to bring it all back and repair it, massively in a big way. And, it's just like running a car. If you run a car at the highest RPM for 5 days straight, it's something's going to happen to that car. It's going to have a lot of wear. So anyways, that's the business we're in. So what's going to happen? I mean, we're going to continue to make technology that allows them to drill faster, more accurate, give them more information, and at the same time, automation.
Energy services is kind of a proxy for the state of the energy industry sometimes. What are you seeing now? There is less drilling, but do you see strength, I guess you could say, in things, or what are you seeing?
Yeah, I mean, I think that the stronger the whole industry is, the better. Operators a few years back took it amongst themselves to change their ways with how they dealt with, what their free cash flow and not just trying to increase production and not carrying as much debt and not diluting their companies with, share offerings all the time that seem to work good when, oil prices are really high, but as soon as they go down, now you got a lot of shares and a lot of debt. So they kind of, when we looked at that, some years back, Phoenix, we had some debt in 2014. We'd always had the company before that where we had very little debt, if any. And, we started to grow so much in probably a bit of a incorrect way. We just grew. And by doing that, we had to get more assets all the time. And we build a lot of our assets, and as we built these assets through a couple of years, we just kept adding to them. And in that, we added to the debt. And, but we grew the, earnings before tax and that. But, anyways, when we thought we didn't have a debt problem, well, a service company, when they're not drilling, they get zero revenue. When an oil company, when the oil price goes from $100 a barrel to $50 a barrel, they're still getting $50 a barrel. They're not very happy, but zero is a real unhappy number. And so, when things slow down, and especially like they did in 2015, and the revenues drop that much, our EBITDA goes to a negligible amount. And when that happened, of course, and we still had the debt. Now we're looking in the mirror and going, what the hell? We've created a little bit of a monster here where we had 1 times debt to EBITDA, and now your EBITDA goes down from 100 million to like 20 million. Now the banks are all over you. So, lessons learned. We can't rely on these types of situations. And that's why to this day, we'll stick by these formulas where we just won't bring on hardly any debt into Phoenix. The oil companies, learned that they needed to change their ways and reduce their debt. And, one of the ways they can advance is to pay out their shareholders. And we saw that. And so, Phoenix went down this route a few years ago of beating our debt down to nothing. And, we were probably way ahead of anyone else. And we did it. And, so for many years now, we haven't had any debt, but, we kept growing the business with the cash flow, with some CapEx. And now we're in a position where, we've got a lot of great assets, a lot of great technology, and we're going to kick some ass, and in 2023, we've said it, we've already put a dividend back in, and we raised it 4 times, in the last year and a half. And, we're going to continue to reward our shareholders, and we're going to follow the path of the operators. We're going to be conservative on debt, and we're going to reward our shareholders because we don't get rewarded in the market. You've had other guests on here that have probably talked a lot and know way more about I do on valuations than that. But, you would never, if you had an apartment building and you were getting $100,000 a month in rent, net rent, You wouldn't sell that building for $200,000, would you? You would sell it for $1 million or more. We have a company that, you wouldn't get 2.5 years of EBITDA to pay it off. So we're not going to cry. We're going to reward ourselves. And the best way we can do that is dividends. And yeah, for sure.
Well, it's like, few of the companies, 10% yield in the last few days in the markets.
Yeah. I think we're over 8 right now. And we have no debt, and we have a dividend, and we've grown, and we're actually going to have our best year in our history.
And more, and there's still cash left over.
Absolutely.
Wow.
Yeah. I mean, absolutely. We could double our dividend easy right now, for sure.
Even though drilling's down, the service industry, the ones that are left, are still doing really well.
Yeah. And 2 things, the industry, for all those reasons I talked about a bit there about, the politics and all those crazy things that happen in Canada and are happening in the United States even right now, and egress and stuff, and the hatred that they have towards our fossil fuel business, it crushed the sector. And when it crushed the sector, it took out a lot of the sector. So there's less competitors in it, albeit there's still quite a few. But the other thing that happened, like I said, is the technology, that the people that actually invested in and produced the technology that the operators seek now are winning. And so we're winning so much so that with less rigs running, we're doing better than we ever have.
Really, that is not a common story right now in energy. The service side, everyone's going toward, like, even the producers are a tough sell in terms of investors, but it seems like energy services are even harder sell. But that story of the returns that you guys are having even now is, like, nobody's talking about that. Well, it's
maybe
they are just like
it's the people in Calgary that know,
right?
But outside of that, they're not talking about it, and they're not interested.
Right.
And they're not interested because they've been taught that this is a sector that probably you want to steer clear of for a lot of reasons. Like, a lot of people don't like fossil fuels. And unfortunately that's the norm now. So there's that reason that they want to stay out of investing in our sector as a shareholder. We don't want to raise any money ever. So, we just want real shareholders. I call what we call at Phoenix our real shareholders. That's who we want to reward. And that's the people that believe in our sector and believe in what we're doing. But the other thing is that they don't understand that this might not be that cyclical for a while. Like, this is an industry that, even if the rig count doesn't grow, it's a damn good industry right now. We're doing real good. And so we're real happy at Phoenix. Like, I've never seen it better for us right now.
If you're approaching 10% yield, that's pretty easy sell.
Yeah. Well, hopefully if the share price goes ways up, it's just a 5% yield. But right now that's just what it is, right? So join the team and get on board, and we'll try to reward you or stay away and you might miss out on something, but time will tell.
Do you worry that everyone is real positive right now in Calgary and things are good and it appears everything's going really well? Do you think about it from the flip side? Like, what could go wrong? What takes things down again? How do you think of it that way in terms of risk management?
I don't sleep. Like, I still think about that all the time, just like I did ever since I first started my first business, and even the hotels that I've gotten into and stuff like that. The reality is, I say this, I say it to our board, they hate us. There's people in this country and in political parties and media that they absolutely hate us. They despise us. If you think that they hated us before, I can tell you that they hate us more now than they did before. Yeah. And I'm going to tell you now, they're going to hate us more in the future than they do now. And I truly believe that. And they're doing everything they can to try to hurt our business, especially in Canada. And so I think we always have to be aware of that. I mean, we're in a situation where when I started as a young kid in the service sector and the energy sector, I thought it was, wow, this is a massively exciting industry to be in, and people love us. And then decades later, here I'm sitting here and we employ 1,000 people and they hate us. Like, it's hard to explain that feeling when you go to places like Toronto and And you talk about what you do, and you're thinking the average person there actually hates what you're doing just because of what they've learned. And they've learned all the wrong things, of course. But anyways, yeah. So I mean, outside of commodity prices, the attitude toward our industry, the political mechanisms being put in place to try to stall our industry or take it away. There's a lot of things out there that keep me awake at night. And but the best thing we can do is and pandemics, these
black swans,
black swan events that no one had ever thought would happen that absolutely crushed us too. But that's more reason why you don't want to get into a position where you've got no strength in your balance sheet and no technology and no good people. And, you've got to keep these certain ingredients in the future going, and you will, I think, continue to be rewarded for that.
Do you think the collective ego of Calgary downtown has risen in a high price environment, or like you say, with low balance sheets, everyone's kind of sobered up, learned some hard lessons, and that things aren't going crazy like they used to in the old days?
I do. Yeah. I do. Unfortunately, it's a much smaller group, right?
Right.
It's not just a much smaller group of companies. It's a much smaller group of people. And, there's the people that are left, are very aware
some scars
of what I think I just talked about. And because of that, I think that, there is I think all the companies that are operating in the sector right now are better. They're better companies now than they were 5 years ago. Every single operator is probably better, and every single service company is operating better. And the people that are left are all really good people. It's just unfortunate that we've got massive vacancies downtown and a lot of people that are out of the sector and can't get back in the sector because the sector is smaller and it's changed, And, but yeah, I mean, what's taken place is we've got a huge amount of great companies out there right now that are doing some great things and providing a big service.
Do you think, so the saying is old money in Calgary, someone who had it last week. Do you think that meritocracy still exists in Calgary? You've been in the industry for a long time, and do you think that attitude still?
Well, a lot of people in Calgary, I always said Calgary Calgary was the greatest city in the world, and it had the greatest people in the world and the most entrepreneurial people in the world. I always believed that for decades. And hence you see that the people that own these oil companies or that lead these oil companies, private or public, these are great entrepreneurial people, hardworking and dedicated in that. And, a lot of them, like myself, have equity in their companies and they ride the equity up and they ride the equity down. And, some companies like ours, we don't have a lot of liquidity in our stock, so it's hard to even get out. And so we become, I don't want to say prisoners of our equity, but this is what's happened over the decades. So, you're seeing people in Calgary now they're happy that their equity's back up, as they should be. Calgary's, with a change in provincial government some years ago where we took this city, like I said, that I believe was the greatest entrepreneurial city in the world, and we were company builders, and they made us company destroyers. They didn't care about our industry. They proved that. And now we've got a provincial government that I think cares about our industry again. So I think Calgary is way better now than it was a couple of years ago, but it's got a ways to go to get back to where it was. But, it's the people of Calgary that I think that, have that entrepreneurial spirit, and it's definitely coming back.
I read in March you increased your stake in the company over 10%.
Well, I'd had way more, and with the hotels and stuff that I bought there, I took some off the table to build one basically from the ground up and renovate another one, and so but then I bought back more. Sure.
What do you see in the industry that made you so confident in March and now? What is the signs that you're seeing, and why invest so heavily now?
In the service sector, I think it's pretty positive right now. You've got operators that have clean balance sheets. They need to drill wells. Every single well, here's some statistics. Like, I think there's, for every barrel of oil produced in the Permian, there's 6 barrels of water. The depletion on that oil is pretty big in the first year, and it goes down for many years after that. So it's kind of like a treadmill. You've got to keep drilling. So even to keep the production flat right now, even if it was $60 or $80 or $100 or $120, they've got to keep drilling and just to keep production flat. The pandemic, probably produced an opportunity where nobody drilled for a couple years, and then they wouldn't spend any capital.
Yeah.
So now, just to keep it flat, you've got to keep a certain amount of rigs running.
That's where you come in.
And so that to me is a pretty good positive right now. And the rates are good and the technology is good. So yeah, I mean, it's pretty good right now. Yeah.
Do you worry it's the same old supply and demand that we're not growing production huge right now? Drilling isn't going crazy, but at some point this thing's just going to catch up to itself and the prices are just going to crash again due to classic supply and demand? Or how do you think of it that way?
Yeah, well, I'm not the smartest guy again, but I just think that it's different this time. In the past, whenever we increased, or the operators increased production a lot, they had access to capital. They would just go to the market and raise a lot of money. And as you see, look at the trading multiples of service companies, but the operators are no better. So you've got a situation right now where investors they're really not even open to giving operators money, and operators don't want it. They don't want the dilution. So, I just don't see where they're going to increase the production a lot. And then, now we see, even in the last year and even right now, every time there's a skid down a bit on oil or gas prices, it just probably reaffirms why they shouldn't add a lot of rigs and grow. And there isn't a lot of rigs. There isn't. They're gone. The technology changed so much that all those rigs that weren't working can't work. So, yeah, no, I think for all those reasons why, we should be in a position where the production shouldn't grow and oil and gas prices should stay within some realm of where it's going to work or be real lucrative. And either way for us, they're going to need to drill the well. So we want to get paid more, of course. They want to pay us less, but higher commodity price, more money they make, maybe we can get more of that. So the downside is it's probably less that we could get on a charge, but the upside is it goes up.
It's different this time. Everyone says that, but were you thinking that in 2014 before things crashed? What was the thinking then if you compare it to now? Is it different this time, or are you worried that everyone says it's different? But
yeah. But when I say it's different in certain mechanisms. Like the world doesn't have that much excess oil or gas. The world, there's things that have happened in the world, where they've got to start shipping gas from one area to another part of the world, stuff. So it is different, but like I said, we shouldn't ever, get comfortable and start sleeping through the night because there's a lot of things that are against us too, right?
Advice to an entrepreneur on what not to do. What would you say to not to do, to avoid?
Well,
in business,
don't be lazy and don't be afraid of hard work. You're going to have to do it. Whether it's with your hands or with your mind, put in the hours. I mean, before I met my wife, I didn't even care what a vacation was. There's no way. I mean, I just worked. That's all I cared about. Maybe things are different now because of technology and stuff like that, where people have made a lot of money and entrepreneurs and didn't have to work that hard. But in most cases, you're going to have to do what it takes. And you have to do something that you really enjoy. And you have to find a passion. And if it's not a passion, it's probably not, going to work that way. And then learn from others too. And work hard. Yeah, I mean, never give up. Those are a lot of the traits, and you'll probably be successful.
Well, I think that's a great conversation. We can wrap it up there. I really appreciate your time.
Okay. Well, no, I appreciate it. Yeah. More success to you, and hopefully you get a ton of viewers. So
that's it. Thank you. Thanks for listening, everyone. Hopefully you enjoyed the episode. If you liked what you heard, check out rosebros.ca, where we will have upcoming shows. Until next time, happy coffee drinking.